Okay. Thanks a lot, Governor Rajan, for talking to the BBC. Now, the Indian Central Bank has cut the key lending rates by 25 basis points. Many had anticipated it would be higher given that inflation's been low, growth seems to be picking up. That's come of a bit of a surprise. So why has the central bank decided to go just with 25 basis points, not higher?
Well, first, I think 27 out of 29 analysts expected 25. So, not sure why the general sentiment is that people expected more. Of course, industrialists always expect more than is reasonable, but that's par for the course. I think we delivered what most people anticipated. Of course, the key element of this policy was really the moves on liquidity. The aim was to ensure that the past build-up of policy cuts that haven't been passed through are passed through by ensuring that there are no impediments on the liquidity front. So I think with the various moves, the government in reducing some of the interest rates on small savings schemes, which were proving to be an important alternative to deposits, by our moving banks towards a different way of pricing their loans, called the marginal cost pricing, and through these improvements in liquidity, we will see the past rate cuts being passed through. So I think put that together with a 25 basis point cut, yesterday's cut was significantly higher.
You're right. You've taken steps to really boost liquidity in the banking system so that banks can pass on the rate cuts to the end consumers. Why haven't the banks done that so far? Because it's not that this is the first time you're cutting rates. You've cut rates multiple times in the last 16 to 18 months.
Well, I think some of it has to do with the microstructure of lending in India. What the banks used to do is calculate a base rate based on some average cost of funds, and then lend to customers based on that base rate plus an added margin. Now, I think in an environment where your deposit rates are falling, but what is falling are the new deposits that you contract, not the old deposits, that base rate moved only a little. And so it was easy for the banks in a tough environment to stay with the old lending rates and not cut them very far, basically relying on existing customers to provide them margins and not looking to make new loans to new customers and getting sort of margins from there, especially when borrowing, people aren't really that eager to borrow. So in other words, there wasn't a strong incentive to cut rates. I think by moving them off that pricing methodology and by infusing liquidity into the market, which will also bring down commercial paper rates, we have the twin effects of both the internal framework has changed, which forces them to pass through some of these changes in marginal costs, but also competition has increased from the commercial paper markets, etc., which will again force them to pass through.
Now, last year, you slashed key interest rates multiple times between January and September. If you compare the economic scenario at that point of time, things are looking much better now, even in terms of inflation, growth has picked up. So are we going to see, is India going to see a similar spell now, more rate cuts in this financial year?
Well, we haven't ruled out further rate cuts. In fact, we've said we're still accommodative. What is key to recognize is our inflation rate is still significantly above global inflation rates. Now, I presume over time global inflation rates will come up, but that would mean there's still scope for our inflation rates to come down further. Now, when that happens, that will create more room for us to cut rates more. As of now, given our forecasts of inflation, we have done what we have used what room we have. There are still some big uncertainties which will play out over the next few months. As they play out, we will see what further room there is.
You have constantly been warning or raising the issue of government not spending more to spur growth, the Indian government, to keep the fiscal deficit in check. Are you happy with the measures the government has been taking? We saw the recent budget where they've announced a lot of money has been allocated for the rural areas, spending on social welfare schemes. So are you happy with the way they've been moving on this path?
Look, I haven't. I am a votary of high quality spending. I don't say spend digging holes and filling them up. That's certainly not my view of what spending should be. Public investment in the right places can have multiplier effects which are significant. For example, the Pradhan Mantri Gram Sadak Yojana, which is about building roads into villages, is something which has important effects both for inclusion, economic inclusion, because it brings poor villages into the economic mainstream, but creates enormous economic activity in terms of dairy farming, in terms of creating new sorts of activities in the village, such as retail and so on. So I think there is certainly room for public investment, judicious public investment, and certainly the improvement in road building, in railways, in these rural roads. These are all important actions. But at the same time, we have to make sure that we finance this expenditure in a reasonable way. We built up a large current account deficit when we didn't finance it through domestic savings but had to borrow from abroad. So it's important that we maintain a control on the deficit financing, and that means maintain a control on the size of the deficits. If we are going to spend more on these worthwhile investments, we have to spend less on less worthwhile investments. That means choice, hard choices. And we have always been advocating improving the quality of spending, that is, shifting it from poor quality spending to higher quality spending.
Can India draw lessons from the likes of Brazil, where we have seen that the government ended up spending a lot on social welfare schemes, and now the economy is in trouble?
I think for a poor country, social welfare has a very important priority. You can't abandon social welfare, especially in good times, as the middle and upper middle class get wealthier. That offers an opportunity to also bring up the people who are the weaker sections, the poorer sections of society. So social welfare is important. What would be especially useful is social welfare that improves capabilities, so that they can participate in the wider economy, which means in education, which means healthcare, which means insurance, sometimes access to finance. All these are part of what is necessary in a poor country. But again, I mean, these are all important measures which I think, together with the public investment, can actually elevate growth. But it's important to make choices also, that when you have poorly targeted subsidies, for example, cut those subsidies and redirect them towards those who really need that to participate in the economy.
Now, if you look at the Indian economy, it's one of the bright spots globally. What do you see as the major challenges at this point of time?
I think that it's fairly clear to policymakers in India what needs to be done. What is important is doing it. And I've said before that our challenges are implementation, implementation, and implementation. We need to keep doing what we have set out to do. And I think this is something that, for example, the Prime Minister is extremely focused on, which is constantly checking what has happened, have we done what we said we would do, and moving us forward. I think it's something that we are certainly trying to do at the Reserve Bank, which is why we sort of lay out, here are the things we're going to do over the next few months, here's a timeline for that, and we try and stick to those timelines as we go forward.
Now, I want to talk to you about the Indian banking system, especially the public banks here, because one of the major challenges they've been facing is bad debt. And one news that has been in the focus has been the case of Vijay Mallya, who happens to be the chairman, founder of Kingfisher Airlines. This has been seen as an example of how a lot of prominent companies and promoters, some willful, some due to genuine reasons, have not paid back the banks. How big a concern is that? And do you think there's a criticism that the public banks have not done enough in India to go after these cases?
Well, I think the real problem in India is we don't have a good system to resolve distress. We don't have a functioning bankruptcy system. We do have a structure, but it takes too long and generally doesn't serve the purpose. There's a new bankruptcy code in front of Parliament, and the hope is that this budget session, that bankruptcy code will be passed. Without a bankruptcy code, it becomes hard for the lender to recover his money. We have some draconian laws in place, but if you are capable of hiring very good lawyers, you can hold off the bankers for a long time. And that's why it's important that we have a system which allows recovery in a decent time, in a decent way. What we at the Reserve Bank have been doing is sort of creating some structures outside of bankruptcy which allow banks to recover their money or put pressure on the borrower to pay back, including measures that coordinate the banks rather than allow the borrower to play one off against the other, measures that give the banks more information about what the borrower owes, as well as some flexibility to do deals with the borrower. Now, some borrowers are in genuine difficulty because bad economic times, because their projects got stalled for one reason or the other, and you shouldn't tar everybody with the same brush. There are some borrowers who have misused the system. So while getting at the borrowers that have misused the system, let us also make sure that borrowers in difficulty, that projects in difficulty are put back on track. I think that is really what we have to do going forward. Doesn't mean let bygones be bygones. You know, you have to take action where there has been malfeasance, but also looking forward where projects are in difficulty, even if the difficulty stems from earlier malfeasance. Because that is genuine value, because there are workers whose jobs are at stake, we need to figure out some way of putting them on track.
I mean, if you look at the data, between 2013 and 2015, public banks wrote off about $1.7 billion in bad debt. So that's why there's a school of thought that thinks that the banks also didn't do their homework properly. For example, in the case of Vijay Mallya, they restructured the debt, and that's why the criticism that public banks have gone soft when it comes to big corporates, big companies. So is there...
Yeah, across the world, first banks, unfortunately tend to become more lenient in good times because of the past experience. This is not malfeasance, it's just human behavior, over-optimism. And so in good times, based on past experience, loans are given with less equity, backing from the promoter, maybe longer maturity, fewer covenants. I mean, you look at industrial countries, you see this in the data, it stares you in the face, less collateral demanded. And of course, if times change, the loan that was made in good times, assuming high demand, etc., turns out to be a weak loan. And so adjustments have to be made. This is standard sort of banking. Perhaps they could do better, but this is what happens across the world. And our banks, in some sense, are no different. The key, however, going forward is to make sure that where there is weakness in evaluation, where there is a herd instinct, banks following each other to make loans, which happened in America, which has happened in India, that they develop and strengthen their own individual evaluation capacity. That they don't all move together to lend at the same time to the same guy in a big way. That they recognize the size of the debt that's piling up in one group or one entity. Diversify their lending. All these are standard lessons that are learned from such situations. So I would not say this is anything special that has happened in India. It's the standard boom and bust that happens when you have strong growth and then growth falls off. There are specific Indian factors that have heightened distress. For example, the lack of government permissions for big infrastructure projects, some interventions by regulatory agencies, by courts and so on, as well as I would say we do need to improve the project evaluation capability of some of our banks. They have to improve them. But it's nothing that can't be fixed.
Now, the other big issue that's come under focus in the last few days has been the Panama trials or the Panama Papers, which have revealed that the rich and powerful across the globe were using offshore accounts to hide their money. There are 500 Indians also who have been named in that list. So I want to ask you with the Indian bit, what is India and specifically your bank planning to do? Are they going to investigate these names?
The Prime Minister has set up a committee to investigate this process. We're part of that committee. And obviously it'll go out and see what those accounts are. Now, I just want to caution, without holding any brief for those who have been named, that holding an account by itself is not illegal in India. What matters is how the money went out, under what circumstances, was it taken out legitimately, and so on. So in all these cases where the names are revealed and they put out in public, one has to be careful that assume innocence until proven guilty, rather than assume guilty until proven innocent. We should take this in a measured way. We should look at each of these, and where there is illegal activity involved, throw the book at the perpetrator. But again, be careful about this process, because in these kinds of situations, a lot of names are revealed. Sometimes even, I know of one particular situation, where name is A, but it's assumed to be B, because B is a very important person and A is not so important. But we don't even know the names are the big people that we talk about here. So we have to be careful.
But it's a global problem, because if you look at the data that's come out in the public domain after the revelations, people across countries have used offshore accounts to really hide their money. Some are genuine, as you said, and some are not, it seems, at this point of time. Globally, what mechanism do you think is needed really to address this issue?
Look, I think globally, I think a very real concern across the world is tax evasion. And clearly those who have access to lawyers, to mechanisms to evade taxes have been strongly at work. In an environment where wealth is getting less legitimate, even per se, illegal wealth is obviously becoming a source of great concern. So I think the global environment, correctly in my view, is moving to shut down these havens and the possibility of evasion. It is also putting strong pressure on avoidance. Avoidance is not illegal. Evasion is, but on avoidance also, and asking questions of multinationals. How come you're making so much money, but you're not paying any taxes? I think it's a question we certainly ask in India. Of course, sometimes our tax authorities get pilloried for asking that question, but it is a legitimate question. And what we need to do across the world is agree that all income should be taxed. Then that's the only way you can get a low rate. If everybody's taxed, if the base is broad. If only a few are taxed while a few clever ones manage to avoid, even avoidance becomes problematic, because it puts the burden on those who are either honest or don't have access to those clever avoidance mechanisms. So I think this does raise a question globally. It does raise a question of a few countries where avoiders are welcomed and have fantastic homes and wonderful things, but are really doing it based on avoiding or even evading taxes elsewhere.
I want to ask you the global economic. I want to talk to you about that now. China has been a big concern for the global economy. You've been trying to, in the past also, you've said that China's slowdown is not a very huge concern. It is a concern, but not a big one. How do you see the scenario right now over the last few months, and how is it going to affect India?
Well, China is the second biggest, or maybe even the biggest economy in the world today. So China's slowdown really has important effects across the globe. And I think one lesson we're learning over the last few years is anybody who says we're decoupled doesn't know what they're talking about, because the world is integrated in so many ways. Even if you have no direct links, you have a lot of indirect links. And so anything that happens anywhere in the world affects everybody else over time. So we do have to be worried, like everybody else, about a Chinese slowdown. Now, there are some sort of silver linings in that offset to a small degree the larger impact. And the silver lining is that certainly as an emerging market, we are also very commodity intensive in our growth. And to the extent that commodity prices fall and we consume those commodities, it does make our growth process less costlier. So that's the sort of silver lining. You can see it in, for example, some of the prices of metal, ores, etc. Of course, we do export iron ore, but some other, you can see it in the price of coal. You can see it in the price of oil more broadly. These are sort of some sort of collateral effects, but I think the broad effect of a Chinese slowdown is indeed negative for everybody in the world.
The other big concern which has been watched very closely is the UK will be in a couple of months voting to decide whether they will stay with the European Union or not, Brexit as it's been called. If it does actually happen, how do you see that playing out in the global economy?
Well, I know this is a very important issue in Britain, and it would be wrong for me to pronounce on the economic impact. I think Mark Carney has already said a lot on it. Let me just say that to the extent that it becomes a source of a domino effect across the EU and becomes a reason why there is more let's say difficulty for the EU in coordinating policies and so on. I think that in maintaining itself, if not growing, I think that that would be a very important collateral effect of Brexit. I'm not going to comment on what happens within Britain itself, but certainly is an issue for the European Union.
My last two questions. The Federal Reserve in December said that there will be more rate cuts. That was the message that was coming out. But if you look at the commentary over the last few months, suddenly it seems that that might not happen. There will be lesser cuts. It has sent mixed signals really across the globe. How do you view this situation? Are they on the right track, or is it confusing even for other central bankers like you, the message that's been coming?
Look, I think the Fed is trying to tie its policies to how it sees the global economy developing. And I think what we've seen repeatedly is at the beginning of the year, views on the global economy are much stronger than as the year progresses. And continuously, if you look at IMF forecasts, they get downgraded through the year based on developments, even though, once again, they're optimistic about the next year. So there is probably a structural force in the global economy we haven't understood as well as we should, which is holding down growth. And we have to come to terms with that. But whether that means that we settle for lower growth in general, and if we do settle for lower growth, what does it mean about the level at which we set policies? That's something that we will have to think about. But I think the Fed's behavior is consistent with this, optimism earlier on, and it fades as you go through the year. Certainly their policy seems to be contingent to the incoming news.
The IMF chief has said that the recovery of the global economy will be slow, fragile, and they're not very optimistic how things will pan out this year. Are we headed to what happened in 2008, 2009 in any way?
I don't think one should be alarmist at this point. I think in other places she's used the word new mediocre. The question is this mediocre what we should settle for? The constant belief seems to be there's some policy out there which will elevate us much beyond the new mediocre. Maybe there isn't. That's something to think about. If there isn't, by pushing policy settings to the maximum, are you creating more fragility than we need? That's the question we need to ask. Put differently, I'm not advocating policy pessimism in certain areas. You know, structural reforms, all very good. We should attempt them where there's political room and try and create political room where there isn't. I think we should be very ambitious there. But various stimulus policies, how much should we keep pressing on the accelerator when in fact the problem is not so much a cyclical problem but a structural problem? That's really the question we have to ask. Is there this wonderful place of higher growth we will reach only if we press the accelerator strongly enough, or do we need some other mechanism?
Thanks a lot, Dr. Raghuram, for talking to me.
Thank you.